Ever wondered why some people seem to effortlessly accumulate wealth while others struggle to make ends meet? The answer lies in the fundamental principles they follow when it comes to money management. Welcome to our video, where we will discuss the secrets behind financial success, the rules of money all rich people understand. Number 10. Leveraging wealth. In the realm of wealth management, leveraging is a powerful tool that affluent individuals often wield to enhance their investment returns. This strategy involves utilizing borrowed funds to invest in assets that offer the potential for higher returns. For example, a wealthy individual might borrow money at a favorable interest rate and allocate it towards stocks or real estate properties with promising growth prospects. However, it's essential to grasp the associated risks and costs. While leveraging can amplify profits, it also exposes investors to increased risks, especially if investments underperform. Hence, a thorough understanding of these dynamics is imperative for making sound financial decisions. By carefully evaluating the risks and benefits, affluent individuals can leverage their wealth effectively to optimize their investment outcomes. Number 9. Diversification. Spreading investments across various asset classes is a crucial strategy for mitigating risk. Wealthy individuals understand the perils of concentrating all their resources in a single investment. By diversifying their portfolios, they ensure that a downturn in one area does not drastically affect their overall wealth. This approach involves allocating assets in different sectors such as stocks, bonds, real estate, and commodities. For example, while the stock market might be volatile, real estate can offer stability, and bonds can provide steady income. This balance helps in protecting their wealth against market fluctuations. Additionally, diversification opens up opportunities for growth across various economic conditions, contributing to long-term financial security and resilience. By embracing this strategy, the affluent effectively manage risk and enhance the potential for sustainable wealth accumulation. Number 8. Creating multiple income streams. Achieving financial stability often involves establishing multiple income streams. Wealthy individuals understand that relying on a single source of income can be risky. To mitigate this risk, they create diverse income channels such as earned income from their primary job, passive income from investments like rental properties or dividends, and business income from entrepreneurial ventures. For instance, someone might have a high-paying job, but they also invest in stocks and real estate, which generate additional income. This approach not only ensures a steady cash flow, but also cushions against potential financial setbacks. By diversifying their income sources, the affluent build a robust financial foundation that allows them to weather economic downturns and capitalize on various opportunities. This strategy is key to achieving and maintaining long-term financial security. Number 7. Long-term perspective. Thinking ahead is crucial when it comes to building wealth. Rich individuals often prioritize long-term gains over short-term fluctuations, understanding that wealth accumulation takes time and patience. By focusing on strategies that yield benefits over many years, they can take advantage of powerful financial principles like compound interest and dividend reinvestment. For example, investing in the stock market and letting dividends reinvest can significantly grow one's portfolio over decades. This long-term mindset helps them stay committed to their financial goals, even when market conditions are volatile. By maintaining a steady course and avoiding the temptation to make impulsive decisions based on short-term market movements, they ensure their wealth continues to grow steadily and securely. This disciplined approach is a key factor in their financial success. Number 6. Tax efficiency. Managing wealth efficiently involves more than just making money. It also includes understanding how to minimize tax liabilities. By being strategic about taxes, the wealthy can keep more of their earnings. One common approach is to invest in tax-advantaged accounts like IRAs or 401(k), which offer tax benefits either on the contributions or the withdrawals. Another effective strategy is making charitable contributions, which can provide significant tax deductions. Additionally, staying updated on tax laws and seeking advice from tax professionals ensures that they are taking full advantage of all available deductions and credits. This proactive approach to tax planning helps preserve their wealth and allows it to grow more effectively over time. By carefully considering the tax implications of their financial decisions, they can optimize their investments and achieve better overall financial outcomes. Number 5. Risk management. Effectively managing and mitigating risks is a critical aspect of making sound financial decisions. Wealthy individuals are keenly aware of the potential downsides and take proactive steps to protect their assets. They often start by thoroughly assessing the risks associated with any investment or business decision. Once they understand these risks, they implement strategies to manage them. For instance, diversification is a key technique as it spreads investments across various assets, reducing the impact of a poor-performing asset. Additionally, they might use insurance to protect against unforeseen events that could result in significant financial loss. By carefully evaluating and planning for potential risks, the wealthy can safeguard their wealth and ensure more stable financial growth. This comprehensive approach to risk management not only protects their current assets, but also positions them to take advantage of new opportunities with greater confidence. Number 4. Asset protection. Protecting assets from legal and financial threats is crucial for maintaining long-term wealth. Wealthy individuals often use legal structures like trusts and holding companies to shield their assets. Trusts can provide a layer of protection by separating personal assets from potential legal claims, while holding companies can centralize ownership and limit liability. These measures are not only about safeguarding wealth from immediate threats, but also about ensuring it is preserved for future generations. By establishing these protections, the wealthy can mitigate risks associated with lawsuits, creditors, and other financial challenges. This strategic approach to asset protection helps ensure that their hard-earned wealth remains intact and can be passed down to heirs, maintaining family financial stability across generations. Taking these steps is an integral part of comprehensive financial planning and is essential for anyone looking to build and sustain lasting wealth. Number 3. Philanthropy and legacy planning. Giving back to society and planning for a legacy play significant roles in managing wealth. Many wealthy individuals engage in philanthropy, finding immense value in supporting causes they care about. This not only benefits society, but also creates a lasting impact that extends beyond their lifetime. Establishing foundations or donating to charitable organizations are common ways the rich contribute to the community. Furthermore, legacy planning ensures that their wealth is distributed according to their wishes, supporting heirs and continuing philanthropic efforts. For instance, creating endowments for educational institutions or funding community projects can leave a meaningful legacy. By incorporating philanthropy and legacy planning into their financial strategies, the wealthy can create positive societal change and ensure that their values and resources benefit future generations. This holistic approach to wealth management underscores the importance of thinking beyond personal financial gain, emphasizing the broader impact of their resources. Number 2. Continuous learning and adaptation. Keeping up with financial success means always being ready to learn and adapt. Wealthy individuals make it a habit to stay informed about the latest developments in financial markets, technology, and business trends. This commitment to continuous learning helps them make smart decisions and seize new opportunities as they arise. For example, successful investors often read financial news, attend industry conferences, and consult with expert advisors to keep their strategies up to date. When market conditions change, they don't stick to outdated plans. Instead, they reassess and adjust their investments to fit the new landscape. During economic downturns, they might pivot to more stable assets, while in booming times, they could pursue higher growth opportunities. This proactive approach of learning and adapting ensures they stay competitive and achieve long-term financial success, proving that staying ahead requires constant education and flexibility. Number 1. Money grows on trees. Shifting away from the traditional idea of trading time for money, it's crucial to understand the power of passive income. Instead of solely relying on active work to earn, wealthy individuals focus on creating sources of passive income that continue to generate money even when they're not actively working. This concept can be likened to planting financial trees that bear fruit in the form of regular income streams. Just like real trees, these financial assets require patience and nurturing to grow and mature. While it may take time for these investments to yield significant returns, the effort invested in cultivating them pays off in the long run. By embracing the idea that money grows on trees, individuals can build a sustainable foundation for wealth accumulation, freeing themselves from the limitations of trading time for money and paving the way for financial freedom. And there you have it, the rules of money that all wealthy individuals understand and follow. We hope you've gained valuable insights from today's discussion. If you're ready to take control of your finances and start building wealth, be sure to hit that subscribe button and turn on notifications. Don't miss out on future videos that can help you achieve your financial goals.